Let's start with this news, though, on this not being just a perhaps a two-horse race as we thought it was going to be, but now 7 or more horse race here. What do you make of some of the names that have been brought forth that Kathleen just mentioned?
Well, I mean, Kathleen's list from Craig and Jennifer is probably right, but it's also unimportant. Essentially, anybody on that list is going to be playing the second coming of Arthur Burns. This president will demand loyalty, as is clear with his treatment of Gary Cohn and others, and demanding loyalty from a Fed president means that you get low rates no matter what, and you use a combination of flattery and bullying, as Nixon did to Arthur Burns. And remember, for all the distinguished academics on that list who claim they're going to be tough and hawkish, Arthur Burns came in, and independent. Arthur Burns came in as president of the American National Bureau of Economic Research, as the leading macroeconomist of his day, talked tough, and ended up doing what the president wanted. So I think, realistically, I wouldn't sweat a lot about which choice the president makes, unless he picks one of the bankers instead of one of the people who actually knows what monetary policy is.
Well, you know, that's a very good point, because a banker becoming the Fed chair might not have the same sense of Betty just mentioned of independence. But Adam, I want to take issue with you on this. Maybe you have to charm Donald Trump. Maybe you have to say, oh, yes, President Trump, until you get that job. But once you become Fed chair, the president cannot just remove you. You've got 7 years in that seat, and it's very, very hard to get anybody out of that Fed chair seat. I think the surprise could be you get someone like Gary Cohn, and he becomes somebody who's his own Fed chair and does what he thinks needs to be done.
Look at. I think you're being too abstract. First, a factual correction. You get 4 years as chair, not 7. You get 7 years
as Board of Governors. Thank you, sir.
But you only get 4 years. But anyway, look at the history of Federal Reserve presidents going back to the Federal Reserve chair people going back to the 60s. And in general, the ability of any of them and the willingness of any of them revealed to differ much from the president basically consists of Paul Volcker in the early 80s, and Paul Volcker did that because we were under such extreme inflation pressure that it was obvious. So, you know, I'm not trying to insult previous Fed chairs, but the political economy of this has always been more accommodationist and less independence than on paper. And this is why,
Adam,
frankly, I wrote in the Financial Times today, the bank presidents really matter, because it's not just the chair, it's also the board governors and the bank presidents. Sorry.
No, Adam, I was just going to say, and is there a sense that it's that kind of urgency that Janet Yellen is operating with, that she does want to get the balance sheet unwind underway before she vacates that seat? Because you'd imagine, you know, if your outlook proves correct, the next few years it's going to be tough to be a hawk at the Fed, right? Markets are going to sit back and just go, well, policy is going to remain loose because that's what's politically expedient.
Yeah, I think that's right. I mean, let me be clear. I think Heidi, the policy being loose isn't going to be that disastrous. This isn't 1979 or 1983. So if the Fed's a little behind the curve, we might get a little bit of inflation, which actually wouldn't necessarily be a bad thing. So in terms of the circumstances, it's actually not a bad time to have a overly dovish Fed president, or Fed chair, excuse me. But what you said about the balance sheet, I think, is absolutely right. I think it's not just so much Chair Yellen feeling urgency, it's just a desire to make it non-political and have a long-term plan for reducing the balance sheet.
You know, Adam, just to your point, though, about you know, perhaps politicization of you know, of the Fed. Charles Plosser joined us earlier, who's of course a former Philadelphia Fed president, and this is what he said about the worrisome trend he's seeing on the Fed Board of Governors.
The Federal Reserve Board has not had 7 members in a long time, and I think what worries me about that is it's a sign of the politicization of our central bank, and I think that's a very bad framework to be stuck in, not being able to make appointments, not being able to make nominations, and frankly, the workload on the governors increases, and it's very difficult.
Do you think we are, as he seems to be...
I think Charlie Plosser's...
Go ahead.
Yeah, I think Charlie Plosser is absolutely right. I'm here in Seoul for a joint conference between the Peterson Institute, the IMF, and the Bank of Korea. At dinner last night, I was sitting with two major Asian central bank governors, and they were shaking their heads at the absence of people at the Federal Reserve Board, and also the absence of people below the Treasury Secretary or in the State Department. The politicization of the Fed for several years now, and all these other high economic appointments, is a terrible thing. And this is why I wrote in the Financial Times today that we got to worry and protect about having the Reserve Bank presidents ready to stand up, because if you replace, let's say we finally fill the Federal Reserve Board, but you replace them all at once, you could get a huge swing, and it's better to have some stability.
So I hear what you're saying about Federal Reserve Bank presidents, and in fact, it does seem over the years lately that they have tended to be on the hawkish side. We've got a mix, and you could even look at people like John Williams, who's hawkish when he thinks there's an inflation problem, and it is dovish. So you're saying Alan Greenspan, who oversaw this great disinflation, did that for political reasons? You don't see, if I could call up a chart really quick, hashtag BTV 127, see that inflation has not been above, the PCE core above 2.4% year on year since 2002. And in the last 5 years, it has barely topped 2%. I just don't see where you see that this is a political move for the Fed to be dovish at a time when inflation has been so low. If anything, they kind of want to raise rates right now to get back to normal. That's what they're saying. How is that political?
Kathleen, don't be ridiculous. If you'd listened to what I said it's actually a time when it would be perfectly reasonable for the Fed to be dovish and there would be no damage from it. But that doesn't contradict the fact that it would still, you're going to have a Fed chair and the Fed board who's probably going to be more responsive to this president. And that means if there's a need to raise rates, or if there's a need particularly to intervene in the banking system, that may be interfered with. And secondly, don't talk about Greenspan overseeing the disinflation. What we've learned now is it's not like the Volcker disinflation of the 80s. This long-term bull market in bonds, decline in inflation, is a largely global phenomenon, and it's not done by central banks. It's done, if it was, then we would have had higher inflation by now. Yellen and the FOMC was trying to get inflation to target, and they haven't been able to. So don't misrepresent either the data or my remarks. Nothing terrible is going to happen, but it is going to be a political issue.
Well, I would just like you to give me an example, then, a specific example of who was appointed on political grounds, who did the political doing of the president, of the White House. Just give me one person and give us that time frame so we have a clear example of what you're talking about.
Alan Greenspan from 1989 to 1996.
And he kept rates to, and he was appointed to bring rates down and bring inflation down, and that's what he did.
He was appointed, again, stop twisting it. What I said was he was very accommodationist of the desires first of the Bush White House, then of the Clinton White House. He touted his great relationships with both Treasury secretaries, whereas most Fed officials, chairs, usually in the past, had kept distance from them. He accommodated whatever fiscal policy the government wanted, which broadly is the right thing to do, but he was much more responsive than it would have been. And remember, it's also about financial regulation. He accommodated a lot of mergers in the financial system and interpretations of the regulations that fit with first what the Bush team wanted and then what the Rubin team wanted. So there was political accommodation there, and you can see it.